Welcome to today's presentation. We're going to be talking about Intro to Trading Price Action Trends. So we'll be talking about where you get in, where you get out, and within the context of understanding where a market is heading in the overall direction, overall trend of the market. Now, before we get started with the fun stuff, we got to go over the risk disclaimer really quick. Trading or investing carries a high level of risk and is not suitable for all persons. Before deciding to trade or invest, you should carefully consider your investment objectives, level of experience, and ability to tolerate risk. This content is subject to change at any time without notice and is provided for the sole purpose of education and assistance making independent investment decisions. BasecampTrading.com has taken reasonable measures to ensure the accuracy of the information contained herein. However, BasecampTrading.com does not guarantee its accuracy, is not liable for any loss or damage from any result directly or indirectly from such content, or from an inability to access such information, or any delay in or failure of the transmission or receipt of an instruction or application in connection therewith. Any past performance results shown for illustration example only are hypothetical and as such have inherent limitations. No presentation is being made that the account will or is likely to achieve profits or losses similar to those shown. Past performance is not necessarily indicative of future results. And then along those same lines, we're required to show you CFTC Rule 4.41. I'm not going to read through this one. Basically what it's saying is if we're showing you examples from the past, which obviously we are, because you can't show examples from the future, there's no guarantee it's going to happen again in the future. Now that being said, every strategy that I teach people is one that I've traded live with real money. Okay, I don't teach anybody strategies if I wasn't willing to, if I'm not willing to trade them myself. So these are setups and things that we talk about in the trading room on a daily basis as well, in front of hundreds of people from around the world. So yeah, everything I show you is something that I have used in the past or use currently. Alrighty. So who am I? For those of you that do not know who I am, this is me right here and my beautiful wife and our dog. I'm the Director of Trading Operations and a partner at Basecamp Trading. I also run the Futures Trading Room. One thing that I get a lot of times is, hey, you're a really young guy. And yes, I am pretty young. However, I've been trading since I was about 13 or 14 years old, right? And I've already spent more time trading real money than most people will in a lifetime. All right, I got started, one of the main reasons I got started in this industry in particular, instead of just trading, but in trading education, is because when I first got started trading, my dad's who got me into it, okay? And when he was first started trading, he lost thousands and thousands of dollars looking for quote-unquote gurus out there that were going to teach him how to trade where he could just follow along. Okay. And I thought that that just wasn't right. So my goal was to become the exception. I didn't want to be just that guy that people go and follow and lose a bunch of money. I wanted to actually really help people and help them understand why the trades take place, what the setups are, understand the probabilities of it, and get to the point where they can be trading on themselves and not having to just blindly follow somebody else behind the curtain. All right, so with that being said, where are you currently with your trading? Okay, and you're either in one of three categories here. You're either going to be losing money, breaking even, or making money. So if you had to classify yourself in one of the three categories, 1, 2, or 3, which would it be? Number 1, losing money. Number 1. Number 3, making money. Good deal. Number 2, breaking even. Number 2, breaking even. Losing money. Losing money. Making money. Breaking even. Breaking even. Making money. Losing money. Losing money. Losing money. Breaking even. Okay, good deal. Let me tell you a story about Dave, okay? Dave, he became a member of Basecamp Trading about a little over a year ago, okay? And he's now somebody that I would consider a friend, and that he actually works with us. But Dave's equity curve used to be an equity curve that's kind of one step forward and 2 steps back, where every time he would start to make money, he would turn around and have a blow-up day and just lose it all, all right? And it was just a consistently losing strategy. And one of the things that Dave said is, he told me when I first started working with him, he goes, I've studied trading more than anything else in my life, okay? I've literally built a multi-million-dollar business from the ground up on credit card debt. But trading is really vexing me because it seems like the harder I try, the more I try to be successful at this, the worse I do. Now, how many of you hear that story and you go, yeah, that sounds like me. It seems like the harder I try to do good at trading, the worse I do at trading. I've always been successful. Everything I've ever set my mind to, I can always achieve it. But trading is the one thing that it just keeps knocking me down every time I start getting up. Now, how many of you have an equity curve that looks similar to Dave's, like this, where you start to make money, and then all of a sudden you have that big blow up day and you just lose it all. And you start to claw your way back up. And then the next thing you know, another blow up day happens and you lose it all. And then you go, all right, this is the last time. And then you lose it all and your account's flat. How many of you end your trading day or your trading year with an equity curve that looks like that? Now, how does that make you feel? I want you to think about kind of the goals that you had for why you got into trading. Because everybody got in for a reason, okay? Everybody started trading for a reason. Maybe you lost a lot of money when the markets crashed and you go, you know what, I can do a better job than what these people do. Or maybe part of your future plans of being successful in whatever you want to do, whatever other endeavors you want to do, rely a large part on the income you can make from trading. But if you don't get this right, you're not going to be able to do the things you want to do. You're not going to be able to travel where you want to travel or take the time off you want to take the time off. So what is your lack of success with trading costing you? Is it costing you family time, emotional, or financial stress? Now, the thing I want you to think to yourself is, okay, when does it get to the point that you're willing to actually take the next step and make a change? One of the things I find happens with traders, because I've literally worked with thousands of traders from around the world, okay, ranging from just retail traders all the way up to multi-billion-dollar family offices, managing around $4 billion. Okay, and one thing that I find happens a lot of times is, especially in the retail industry, traders will come in and they think, hey, trading can't be that hard, and they just decide they're going to do it, and they just start throwing money at the market, basically, and they end up losing a lot of money. And then after they've lost a lot of money, then they go, okay, I'm going to go get some education on how to do this. Where if you think about it, that really doesn't make any sense. You should be, if you're going to go try something new, you should go learn how to do it first. Take the time, put in the effort, spend the money to get the education you need, and then turn around and start trying to apply it. Right? So that's a problem. This is a problem that many traders, just like Dave, face, though. And one of my missions and one of our missions at Basecamp Trading is to help you change your long-term habits, behavior patterns, and your futures, because it is possible. All right, now, why are we different than the other trading educators out there? All right, well, one of the things we do is we kind of break up our training in what we call the Summit framework, okay? And it starts off in Basecamp, and then we move into the Ascent, and then we move into Everest. Well, Basecamp is kind of like getting the fundamental knowledge that you need to learn how to move forward with the markets, so learn how to start trading. Okay, the Ascent is where you start going, okay, now that I know the fundamentals, let's actually start learning strategies that I can use. What are some specific strategies that'll fit my trading style? And then Everest is, all right, now that I've got the strategies I want to use, let's start applying them and actually get to the point where we can make this a profitable trading system. Okay. Now, one thing you got to understand, and that we understand, is that trading is not just a go out and do it, snap your fingers, get rich overnight type of thing. All right. It's a journey. You have to have a guide. It's a long-term commitment. And we are at Basecamp all about helping you with that long-term guidance. Now, today, I'm going to be showing you, for those of you that are interested in it, at the end of the webinar today, I'll show you how you can take the next step. If you go, this makes a lot of sense to me, this is what I want to do, I'll show you how you can take the next step and move forward with that relationship with us and with getting into a workshop that'll teach you a system for trading trends. Now, for those of you that go, you know what, this doesn't fit, this isn't the right fit for me, this isn't what I'm looking for, that's perfectly fine as well, okay? But I want you to be thinking as you go through it today, thinking to yourself, okay, is this what I want to be doing? Is this making sense? Is this the type of trading I want to be doing? All right, now, I'll also give you some really good information today that you can turn around and use in your trading on Monday. All right, whenever I'm doing a webinar or something, you're taking time out of your day to come spend with me, I'm always going to teach you something. Okay, but at the same time, you got to remember, it's not a flip the switch and automatically make money. It takes hours and hours and hours of practice. Now, remember Dave, I was telling you about, I want you to know that there is hope. All right, I don't want to beat you up too much. There is hope. This is Dave's equity curve now. Looks pretty good, right? Now, Dave uses some of the fundamentals I'm going to be teaching you today every single day in his trading. All right, and one of the things that Dave said is, he goes, I went from being subscribed to about 50 different quote-unquote gurus out there, and I was placing 30 to 40 trades a day. But after going through the Summit framework, this is what his equity curve looks like now. And he's cut it back to maybe 2 to 3 trades a day. And he went, and one of the things he did is he cut out all the other noise. Okay, I'm not sitting here telling you that there's only one way to trade the markets, because there's not. But what happens is, especially with retail traders, they come in and they start looking at, okay, I'm going to go find this guy because he looks like he's useful. I'm going to go talk to this guy because he looks like he's useful. I'm going to go talk to this guy because this looks like he's useful. And what ends up happening is they end up getting the worst of all of them, and they put together a system that wasn't built to work with each other. And then they end up turn around and their trading just goes straight downhill from there. Sorry about that. So let's get started with the fun stuff, all right? What are you going to learn today? What are we going to be talking about? You're going to learn how to properly identify the current trend or the current environment of any market on any time frame. So everything I'm going to teach you, you can apply to any chart, whether it be Forex, futures, equities, doesn't matter, and you can apply to any time frame. All right. One thing I want you to understand, though, is trends are time dependent. What do I mean by that? Well, I mean, you can have a 30-minute uptrend within the context of a daily downtrend, or you can have a 30-minute downtrend and then have at the same time a 5-minute or a 2-minute or a 500 tick uptrend. Okay, so trends and trend identification depends on the time frame you're looking at. If you're going, I want to be a swing trader, then what you need to do is you look at a longer time frame. You look at a 240-minute chart or a daily chart. If you want to be a day trader, then you look at a smaller time frame, something like a 2-minute or a 5-minute or a 500 tick. All right, but by the end of the presentation today, you'll understand how to identify trends. The other thing that you'll understand is the proper way to actually enter in a breakout, identify consolidation, and enter into that consolidation within the context of the underlying trend. So you'll go, okay, I know directional bias based on which way the market is trending, and then now I know when to actually pull a trigger and get into a trade within the context of that directional bias. Right now, some of the concepts that we're going to be covering today, I've talked about before in naked trading. If you've seen the naked trading webinar, naked trading workshop, you'll see some similarities, okay? Now, what is naked trading? Well, naked trading is referring to trading based on price action alone, okay? So it's not using indicators. We're going back to the basics of just reading the price chart. One of the great things about naked trading is you do not need any indicators to see the setups. So anybody can just pull up a chart, look at it, and say, okay, I see where the setup's at. We're going back to the fundamentals. Almost all the indicators that we use anyway are based on the price action, right? So why not just learn how to read the price action yourself? All right, so that being said, what is the definition of a trend? What is the definition of a trend? No, Jim, it's not. All right, well, the way I explain it to people is I always tell them to look at it like an equation. So let's say we want to find an uptrend. If we're going for an uptrend, then what we have to have is higher high plus a higher low. Now, what do I mean by higher high and higher low? What I do not mean, I'm not talking about just one price bar in relation to another going like this, higher highs and higher lows. That's not what I'm referring to. Whenever we're talking about higher highs and higher lows, or when we're talking about a downtrend, lower highs and lower lows, we're referring to pivot points. Okay? Now, a pivot point is a place where the market has climbed or retraced from. It's a price point the market has gone to and then pulled back from. So if you look at this, like each little line here is a candle, then this is a pivot high, this is a pivot high, this is a pivot high, okay, where the market went up, then turned around and came back down. And then this will be a pivot low, this will be a pivot low. So if we're looking for an uptrend, the definition of an uptrend is higher highs, so that one's higher than the last one, and higher lows. That one's higher than the last one. So you can see here we have higher lows and higher highs, so therefore we're in an uptrend. Okay? Does that make sense to everybody? Pretty simple concept. Now, the definition of a downtrend is lower highs plus lower lows. So it'll be the exact opposite. We're basically looking for the market to be stair-stepping down. Just like that. We go, okay, well, this low is lower than that low, and this high is lower than that high. So we have lower highs and lower lows, therefore we're in a downtrend. Make sense? Everybody following along so far? Now, just like a math equation, if you are missing one half of the equation, for example, let's say we just have a lower high, that does not make a downtrend. It's not true. Okay? So what do I mean by that? Let's say we're in an uptrend and we're looking for the market to shift to a downtrend. Well, just because we pull up here and we start moving back down and we put in this lower high, that does not mean it's a downtrend yet, because that's only one half of the equation. It doesn't change to a downtrend until we come down and break through the previous pivot low. And then we have a lower high plus a lower low, which equals downtrend. Okay? Now, if the market is going to be in one of three market conditions. It's either going to be uptrend, downtrend, or consolidation / reversal. All right? So keep that in the back of your mind. Market's either going to be trending higher, trending lower, or consolidating, or reversing. All right? So let's go ahead and take a look at what this looks like on an actual price chart. Now this is on bonds. I'm going to show you a number of different markets on a number of different time frames so you can see what it looks like across various time frames. But this is on 500 tick chart on 30-year bonds. Now if you've ever been in a trading room with me, or you've ever been in one of the webinars or workshops with me where I've talked about trend trading or talked about trading bonds, you know 500 tick is my favorite time frame for intraday trends in bonds because you get very nice setups like this all the time. Let's start on the left-hand side of the chart here. So we have a pivot low there, right? Excuse me. And then we have a pivot high. And then we have a higher low and a higher high. Make sense? Because the market goes up, pulls back, goes up again, pulls back again, and goes up again. And if we look at these, remember the definition of a trend, we go, this high is higher than the last high. This low is higher than the last low. So that means as of that point, you're in an uptrend. And then we continue to put in higher highs and higher lows the entire way up this trend. Okay? Until we get to this point where we put in a lower high. Now, does that lower high change this trend? Are we in a downtrend as of that point right there? You got it. No, we are not. When do we actually change the trend? We change the trend when you get both sides of the equation, both halves of the equation. That means we have to break through the previous pivot low. Now we have a lower low and a lower high. Now we're in a downtrend. Okay? Now, one thing I want you to pay attention to, we are not looking at little blips like this. Okay? We're not looking at little bounces like that, retracements like this. We're looking at the larger pivots. Okay? Keep that in mind. One problem that a lot of traders have is they get caught up on these little tiny retracements, and they start going, oh, the trend has shifted, but it hasn't. You got to look at the larger pivot points. Don't get caught up on the small stuff. Okay? Let's take a look at another market. This is crude oil. This is on a daily price chart. So once again, let's start on the left-hand side. We have our pivot low. Then we bounce up. We have a pivot high. We pull back down. We have a pivot low. We bounce up again. We have a pivot high. So looking at that, as of that point right there, what is the trend based on what you've learned so far? That's right. It's in an uptrend. Why? Because of the equation. We have higher highs and we have higher lows. See how simple this is? All right, now I know we're not talking about entering yet. We'll get to that eventually. But first I want you to concentrate on learning the definition of a trend, because this is one of the number one things, in my opinion, that can change your trading. Just making sure you're trading on the right side of the market. I worked with a professional trader. This is how he makes his living. Trading is how he makes his living. Okay, he's been doing it for 20 plus years, which means he's pretty good. If you've been a professional trader for over 20 years, that means you're a good trader. Okay, but he came in and he went through a mentorship with me, and he goes, you know what? I never had a trend explained to me in that manner. He goes, now I'm already a profitable, successful trader. However, this is game changing. He goes, my profitability has almost doubled just by adding this type of filter, understanding where the market as a whole is moving. All right, so let's keep going here. We go and put in a higher low, and we go to a higher high, and we go to a higher low, and a higher high. So this whole time, you're in an uptrend, right? Pretty easy to define. Now we pull back here, and we break through the support. We break through down to a lower low here. I apologize, the thing is getting a little bit sick or something. Now, does this change the trend? Because now we have a lower low. Are we in a downtrend yet? Yes, this is a daily price chart. No, we're not in a downtrend yet. The reason, remember the definition of a trend? For a downtrend, we have to have lower high plus lower low equals downtrend. And right now, all we have is lower low, so we're still looking for the second half of the equation. When do we get that second half of the equation? As of about this point right here. Because now we have a lower pivot high compared to the last pivot high. So now we have the lower low plus the lower high, and we're in downtrend. And we continue to come down lower low, lower high, lower low, lower high. And then right here we put in a higher low and a higher high. So you actually shift back to an uptrend. Now I'm going to explain to you, we're going to revisit this chart later, and you'll understand why this is actually a good thing. And then why the trend, I'll explain to you why the trend resumes downtrend immediately right there. All right, then we go back to lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Okay? Everybody see this? Yes, this is on daily, Iris. The last chart was a 500 tick, and the next chart is also a 500 tick. You can use this, again, on any time frame you want to use it on. Intraday, end of day. Now, this is Apple. This is on a 500 tick Apple chart. So let's start on the left-hand side of the chart. And this one looks like it's kind of a choppy day, but actually this is a well-defined trending day. It's just the trends are not lasting very long. But let's look at how they move. Okay, we have a low down here, then a high, and then a higher low. Okay, so which way is the trend? We have higher highs here, higher lows here, so we're in an uptrend. Then we go all the way up, we go higher high, higher low, and then right here, we put in a lower high, right? Because this one's a little bit lower than the top right there, about 1 penny lower. Then what happens? We come down, we put in a lower low. So now we have lower high plus lower low. So what does this mean? Now we're back in a downtrend. Then we go lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. Boom, right here, we pop to a higher high. Does that change the trend? Nope. That's 1/2 of the equation. This is why we don't change the trend there. And then we turn right back around, go back lower low, lower high, lower low. Then on the right hand side, we start climbing and we break to a higher high. And then we pull back and we put in a higher low. So as of about this point right here, we're now back in an uptrend. Then we go higher high, higher low, higher high. We pull back and we go back into consolidation. Okay? For these pivot high and low points, do you consider the wick or just the body after the close of the bar? You look at the wick. You look at the wick, not just the body. All right, let's take another look. This is the Euro-US dollar on a 5-minute price chart. Starting on the left-hand side yet again. Which way is the trend as of this point right here? You got it. Good job. I'm proud of you guys. You guys are paying attention. So we have lower highs and we break to a lower low. Therefore, we're in a downtrend. And then we go lower low, lower high, lower low, lower high, lower low. Now, isn't it interesting that every single time it looks like it's being choppy here, but really this isn't chop. All it's doing is it poked down below the low of the previous low, it's staying below the high of the previous high, and you're staying in a downtrend. So although this is kind of moving sideways, we're still overall in a downtrending market. Okay, and then look, we come low, high, higher low, higher high. Boom, we reverse back to an uptrending market. Higher low, higher high, higher low, higher high, higher low, higher high, higher low, lower high, and then you consolidate. Now, remember the definition of a trend is higher highs and higher lows, or lower highs and lower lows. So if we are putting in a narrowing range, that means we can just look for a breakout because there is no trend right there. It's consolidating within inside the previous pivot high and low. All right? Make sense? So let's talk about, now that you understand the fundamentals of reading the trend and understanding how to be on the right side of the market as a whole, how do we actually enter into the trend? So you're going, great. I can now say, okay, this market is trending higher or this market is trending lower, but I don't know where to get in. Well, now we're going to talk about where to get in. All right, the first step that we take after a trend changes is we're going to draw a trend line across the 2 pivot highs or across the 2 pivot lows. This trend line it becomes what we call the quote-unquote line in the sand, and we look for a continuation of the original trend if that line is broken. All right, so let me repeat that. The first step we take after a trend changes is to draw a trend line across the 2 pivot highs or across the 2 pivot lows. That trend line becomes a line in the sand, and if it is broken, we look for the trend to change. All right? Now, if our line in the sand is broken, what we say is that the market has had what we call a micro trend, or a short-term counter-trend move before accelerating in the direction of the original trend. Alrighty? So let's take a look at what this looks like. This is Apple, yet again. Now we're looking at a 30-minute chart. Like I said, I'll use a bunch of different markets and a bunch of different time frames. So we have, let's first step one, identify trends so we know which direction we want to be trading. We want to set up that directional bias. So we're going to look at a pivot high, we're going to look at a pivot low, we're going to break to a higher high up here and a higher low. So we're in an uptrend. Okay, higher highs, higher lows. So we're in an uptrend. And then over here we go high, low, lower high, lower low. Right? So trend just changed. So what's the first step after the trend changes? I just read it to you. First step after a trend changes, draw a trend line across the highs or across the lows. That becomes our line in the sand. So what's that look like? It means you'll draw a trend line going just like this. And if that trend is broken, like it is here, we have a long entry and we're looking to resume the original trend. Right back immediately to higher highs, higher lows. Then again, we put in another lower high here, a lower high within the context of an overall up moving market, an overall uptrending market. So what do? Draw our line in the sand. Breaks that line in the sand, another long opportunity. Then we resume the uptrend. And it's funny because people will be like, they'll be saying, why is Apple still climbing? Why is Apple still climbing? Well, all you got to do is just look at the trend. Is the trend still intact? Then we expect it to continue to climb. All right? So as long as there is a trend in place, we say that trend can go on indefinitely. Now, one thing I want you to keep in mind with any trend and with any market, basically, all right, it's kind of like a bell curve. The further a trend goes, the longer that market has been trending, the lower the probability of success or of continuation. So what do I mean by that? Well, this is what the bell curve would look like. If this is success or continuation, trying to write sideways, so this is saying the probabilities of continuation, and this is time. When the trend first starts, will be like this, and then as time goes on, the probabilities of continuing higher will get lower and lower and lower and lower. Because the more extended that market gets, the lower the probability of continuing with the original trend. So keep that in mind. Ideally, we want to be getting in right around, so if you think about when the trend first starts, we get that first higher low and higher high. We want to be entering right around this first couple higher lows and higher highs. If you're getting up at the 15th, 16th, 17th, 20th higher high, higher low, that means the market's getting pretty extended and probably the probabilities are not there. It's not a trade that I'm looking for. It's not that ideal setup. Make sense? So let's take another look. This is the cable or the British pound US dollar on a daily price chart. First step, what do? First thing we do is we get our directional bias. What is the underlying trend? So let's start on the left-hand side. High, low, lower highs, lower lows. Right? So we're in a downtrend. So our directional bias is bearish. Now what happens here? Well, we come down, back up, back down, back up again. All right, so this is our first trend line. Boom, there's trend line number one. What happens? It breaks and it runs straight down again. All right, then what happens? We go up, down, up again. So we change trend once again. Draw our trend line, break the trend line, run straight down again. Now, these are two smaller pivots, right? But they made a much larger pivot. So now we have a big pivot here and a big pivot here. So we can draw a more significant trend line there as well. So what does that tell us? Well, the reason that's important is because if we took the short on this first one here, or on the second one here, that means our first target would be right on top of this trend line because it may stop and reverse, which it stalled for a week or so. It didn't reverse, but it stalled. And then we can always re-enter or pyramid, so add to our winning position when we break through here. Sell two. So we're adding to that original short. And then you really start to run. Now, when we're trading these types of setups, when I'm trading a breakout setup, I'm not necessarily looking for the major trend move. Okay, because normally you're getting in a little later in the trend by the time you get one of these consolidation points like this. I'm normally looking for that quick spike one way or the other. So for example, oops, if I could draw a straight line, this is what I'm looking for, that run, this run, this run, this run. That's what I'm looking for. I'm not looking to get in there and take a huge move out of it because we're too late in the trend to be catching that major trend. Now that being said, when we're getting into these trades, if we're selling here, our stop is just going above the previous bar's high. So we have very little risk, and we're taking out 2, 3, 4 to 1 reward risk ratios on these trades. Okay? So we're still getting very attractive reward risk ratios. One thing I always tell people is you never want to, a reward risk, for those of you who don't know what it is, let me backtrack here. A reward risk, for those of you that don't know what that is, that's how much you make on your winning trades, your reward, versus how much you lose on your losing trades, your risk. The better that reward risk ratio is, the easier it is for us as traders to be long-term net profitable, because one winner will pay for multiple losers. So one thing we never want to do is sacrifice our reward risk ratio. So every strategy that I trade offers attractive reward risk ratios, the potential for attractive reward risk ratios. Okay. So I'm not saying you're going to jump in here, risk a whole lot, and then only expect it to go a couple of ticks. That's the wrong idea. That's backwards. We're going to risk a small amount, and we're going to look for it at least 2 or 3 times the amount of our risk for our target. Alrighty? And then actually what ended up happening, one of the ways of managing these trades is trailing your stop just behind the previous daily or 2 days highs. And then when it breaks back up, you get out. And that keeps you in for things like this all the way down until it breaks back up, and then you're out. And in this case, I believe the British pound is right back over here somewhere at current price. Just, I think it's up near this high. Okay? When you draw the line in the sand, waiting for it to resume the trend, couldn't we also draw a line expecting it to go lower? That's what we're doing, Raphael, I think. I'm not really sure what you meant. Could you rephrase your question? All right, so let's continue on. Remember I said we would revisit crude oil here. And by the way, I'll do a big Q&A at the end and answer all your questions as well. So crude oil, let's start on our trend, okay? First we're in the uptrend, right? Then we turn around, we come to a downtrend as of this point, right? So if we change to a downtrend, that means we draw our line in the sand. Now, what I want you to notice here, there's a couple things that are important. You see how long it took for this market to come and break this trend line way down here. When we're looking for a micro trend break, so that quick reversal to resume the original trend, it should happen right away. It should not take 30, 40, 50 price bars to actually go up and break that trend line. Okay? So by the time it actually does break it down here, it's taken too long. This is ideally, this is as textbook as it gets. This is the ideal setup. So we're in a downtrend here. We go low, high, higher low, higher high. So we draw our trend line. You see how it immediately after putting that higher high comes back down and breaks the trend line? This is what we want to see happen. It shouldn't take forever. And then we immediately go back into a downtrend. We're coming down, we put another higher pivot low here, draw the trend line, break down again, resume the downtrend, another higher pivot low here, trend line, break down, continue the downtrend. You guys see how that works though? You see what I mean by it shouldn't take a really long time. It shouldn't dilly-dally around. It should turn around, break that trend line, and start to resume the trend. The other thing I want you to notice is every time that this setup works, the market runs. The market runs. market runs. All right. If it doesn't run, a lot of times that means there's a problem with it, and we can just go ahead and close a trade and live to trade another day, even if it hasn't hit our stop. One mistake that a lot of traders make is they think that once they get in, that it either has to hit their stop or it has to make them money. And that's not true. There's two ways to increase our reward risk. We can minimize our risk or increase our reward. One of the ways we can minimize our risk is get out if it's not behaving correctly. All right? So in the workshop, you know how I told you we're going to be doing a workshop? The workshop is on January 31st, so next Tuesday, I believe, Tuesday or Wednesday. What are you going to learn in this workshop? You're going to learn how reading price action is one of the best ways to find actual trade setups. So we're going to expand on some of the price action trading concepts you've learned today. All right? Then we're going to talk about how mega trends often offer opportunities for huge reward risk ratios, sometimes 20, 30, 50 to 1 reward risk. And how the better that reward risk is, the easier it is for us as traders to become net profitable long term. Okay, so today we were talking about breakout trades within the context of a trend. That's not looking for that mega move. We're not looking for that giant move. We're just looking for the short-term move with the breakout. We'll talk about how to get in and look for the big trend that'll last several weeks to several months to years. Okay, we'll talk about the fundamentals of trade management for trending markets. Now, what do I mean by the fundamentals of trade management? Well, we're going to talk about entries, exits, stops, pyramiding, trailing stops, expected reaction from the market, all of that. Okay, so by the time you come out of here, you should be a trend trading beast. All right, now let me show you. This is Dave's equity curve, and this, by the way, is what Dave looks like. How many of you feel like you've taken something away from the presentation today? How many of you came in here and you go, you know what, this was actually worth it. I learned something. I'm glad I learned something. Good deal. Glad to hear it. That's like I said, I always want to try to teach you something. Now, how many of you can see how the simplicity of trading price action trends can help you become more consistent, and just by understanding the overall direction of the market can help you become more consistent? Now, how many of you are a little bit more interested in seeing what the long-term relationship with base candle trading looks like? By the way, this is Esam. That's what he looks like. These are his equity curves. This is his Forex equity curve. This is his futures equity curve. And he went through the base candle trading framework. He did a couple mentorships with me as well. And he actually sent me 2 other equity curves. And both of those other equity curves were from when he started trading previously, and he blew up his account on both of them. They go up, and then all of a sudden they go flat. And he's turned his trading around, and I am so proud of him as well. All right, now this is what you're getting. You know how I said that it's a long-term relationship, and we understand it's not an overnight fix. One thing that happens a lot in this industry is people will come in and they'll say, hey, here's a workshop. Now you're going to be a super trader. And I'm telling you right now, it's not going to work that way. It doesn't work that way. So one of the things that we do is anybody that comes in and they're looking to join in on the workshop, you'll get 1 month of platinum membership as well, included in your workshop. So that means you can be in the trading room, you can be watching the end of day videos, you can be coming to the members only webinars, and you can start getting that long-term relationship in place where you can be asking questions and continue education. Okay, the trend trading workshop is on January 31st. Okay, and that's at 7 p.m. Normally that's going to be $500 for it when we sell it on demand. The platinum membership is normally $147. So normally it costs about $644. It's not a bad value though, because $644 is one trade. All right, now today though, one of the things that we're doing for everybody, because it's getting ready to happen, the workshop's getting ready to happen, it's going to be live, we're doing it all for $297. All you have to do is go to bctnow.com/trend. Again, bctnow.com/trend, and that'll get you the workshop on the 31st, plus it'll get you started with 1 month of membership so that you can come into the trading rooms every day. We have futures trading room and we have an options and equities trading room. So there's 2 different trading rooms, plus you're going to get the end-of-day videos, plus you're going to get the members-only webinars, plus we're getting ready to launch in the next week or so a chat room where everybody can be in there chatting with each other and talking to each other, asking questions, and we'll be in there as well teaching you. Again, you get all of that for $297. Now, it's not just Dave, it's not just SM. This is Lori's equity curve. She's gone through the Summit framework, and I'll be honest with you, her equity curve looks even better than mine. And you can tell, okay, that all these traders trade differently. They all trade differently. And I'm not here to say that trading is a one-size-fits-all, because it's not. But that's one of the things that we like to do, is we try to help you get to the point where you have a strategy that fits your personality, that you can stick to and that you can follow, because everybody has their own trading personality. All right, so again, you're getting 1 month of Platinum membership, plus you're getting the Trend Trading Workshop. All that would normally be about $650, and you're getting it all today for $297. Just go to bctnow.com/trend to get signed up. When you go there, this is what it'll look like. And by the way, I'm going to start answering questions here in just a moment. This is what it'll look like. All right, you just come here, fill out all your information, first name, last name. Make sure you put in the correct email. Make sure you type that right, because that's where you're going to get your login details for the Basecamp Trading. That's where you're going to get the link to join the workshop, so everything gets sent to you by email. So make sure you put that in there correct. All right, fill out all your information, credit card info, place your order, complete your purchase. You will be good to go. All right, that workshop is at 7 p.m. on the 31st. 7 p.m. on the 31st. No, John, we're not talking about MTAM today. Can I go over upswings real fast? You mean an uptrend tip? Lionel, there will be one. So the definition of an uptrend is higher highs and higher lows, right? So you'll be looking for pivot highs that are increasing and pivot lows that are increasing. So this high is higher than that high. This high is higher than that, or this low is higher than that low. This high is higher than that high. Okay, and you always go the current pivot in relation to the previous pivot. Current in relation to previous. The workshop will be between 2 and 3 hours long. It just depends on questions and how long it takes to answer everybody's questions. Make sure you all understand it. Yes, John, it will. Great reinforcement today. Have a great weekend. You too, Phil. All right, now let me go back up. Do we trade bonds in the live trading room? Yes, Gordon, we do. Can we talk about the April to June trading trend line? You mean you're talking about the British pound? I do not know where you're referring to, though. Agnes, Dave Aquino trades options, so if you can come into the options room, you can work with Dave on options. This trend line here, the reason, so somebody was asking, why are we drawing this trend line down here instead of going up and across this pivot from this pivot low here? It's a good question. The reason is because if we draw it this way, connecting these pivots, we hit it once here, once here, once here, once here. So we hit it 4 different times. If we can draw the trend line 4 times, or where we hit it 4 times, that's a better setup than drawing a trend line where we can hit it 1 time. Make sense? Yeah, again, bctnow.com/trend. If you need help, send us an email, support@basecamptrading.com, or you can call us at 801-889-2699. There's nobody manning the phones right now, though, so it'll probably end up being next week before we get back to you. Does the workshop teach money management? I'm not sure what you mean by money management. You mean trade management? Risk management? Yes. Yes, Melinda. I announce trades that are in the trading room. One thing you got to keep in mind, though, we're not trying to, remember how I told you we didn't want to just create a group of followers where they're just blindly following Thomas's trades? So we do it at our trading room a little bit differently than other trading rooms. We're not just saying long, short. We try to explain why setups are developing, what the trigger points are, what the setup is that you're actually looking at, why it's good. So you can kind of start to learn for yourself how it works. All right, and then you can start saying, oh, I see the setup there. One of my favorite things is when people in trading rooms start telling me, hey, Thomas, there's X setup in this market. I go, hey, you're right. Sign up. Looking forward to it. Sounds good, JW. Yeah, the workshop is recorded. Workshop will be recorded, and everybody will get a copy of the recording. But all right, everybody, that is it for today. So I hope you all enjoyed it. Hopefully you learned something. Again, just go to bctnow.com/trend to get signed up for the trend trading workshop. It's going to be a lot of fun. Looking forward to it on the 31st. So have a great evening. I'll see you if you're signing up for it. I'll see you in the trading room on Monday morning. And until next time, happy trading.